Hey, good morning, everyone. So, mic is active, screen share is active. Everything should be coming through clearly. Just a reminder, it is a live online webinar. It does use a lot of resources as far as bandwidth is concerned. So, if you are using any other programs like Skype, TweetDeck, something like that, it is worth shutting them down. And that way you will receive, hopefully, a fairly uninterrupted broadcast of this event live going out to hundreds of attendees right now. So I've counted about 4 this morning. We're doing quite well. All right. Uh, so it's Monday, the 1st of December, 2014. It is the first week of a new trading month and uh, uh, a pretty jam-packed economic calendar. What with it being the first week of the month, it tends to be the busiest period on the economic calendar. In any case, it is dominated by the central banks. On Tuesday, we have the Reserve Bank of Australia with the latest cash rate decision, widely expected to be held at 2.5%. And if they cut a little bit further, that would be a surprise decision and could well send AUD USD into a bit of a spiral. On Wednesday, it's the turn of the Bank of Canada. The overnight rate currently stands at 1%, again, widely expected to hold. On Thursday, we have the Bank of England with the official bank rate. We also have the ECB with the minimum bid rate. The ECB announcement is followed about an hour later by the ECB press conference, and that press conference, as long as I've been watching it and comparing it to price movements on screen, particularly as you might imagine for the euro crosses, tends to be a fairly volatile affair. The week closes with Canadian unemployment data, and that, of course, is overshadowed by Big Brother, the non-farm payrolls report out of the USA. We have no less than 7 speaking engagements from members of the FOMC, and then you throw the releases of PMI and for service sector and manufacturing out of the UK and USA into the mix, and you really created a bit of a hot pot there. So expect all the usual kind of volatility that surrounds those, that is normally surrounding those particular events. This morning, I'm looking at a lot of generic triggers as far as trading bias is concerned and trading direction is concerned. We don't have too many charts to work through. I'm looking at about 6 or 7 pairs this morning, like I said, because at the moment, what with it being the beginning of a new month and we're heading into the close of the year, we really need the monthly flows to develop as well or on top of the established structure to allow for more consistent trade entry. So we're looking at more generic levels this morning. Nevertheless, we do expect to be able to pick off some fairly decent trades off of sharp support resistance levels as the week progresses. First up this morning, what we're looking at is the USD JPY. I actually published my trade notes earlier than usual this morning, so they were published around about 2 a.m. UK local time, and price action has developed since then, pretty much confirming the analysis that was published at that time. So we're going to be running through a lot of that analysis that was published about 2 a.m. UK local time. It's almost 8 hours ago from now. First up is the USD JPY. We've had a general expectation on USD JPY that we ought to start looking for failure in the instrument from around these price levels. And when I'm talking about looking for failure, we're looking for a corrective wave to the downside. And I do believe that once that corrective wave begins in earnest, then there will actually be significant room to the downside. So, if you've attended these sessions often, I'm either talking about 1,000 pips to the upside or 1,000 pips to the downside. Same old story this morning. We're looking for positions that could develop or positions with significant swing potential. Let's put it like that. That's what we're looking at for here this morning, right? So just positions with significant swing potential. So first off, USD JPY, and you can see the wall that I've got marked on my screen there. The initial plan had been that if we'd got a strike on the underside, that would have made a fairly secure kind of short play on this instrument. But what with the flows heading north, the wall that we were looking to be breached this morning was this one. And as far as near-term support is concerned, we were looking here, right? So we considered that block to be the support block, and the trade plan being that once that has breached, then either you chase it to the downside or you can sell the pullback looking for a deeper correction in this particular instrument. And that remains the plan as it stands right now, right? So we continue to look for further downside on this instrument. So long as the price now remains below the 1880 price handle, we would consider intraday bear control of the instrument, and so we have a bear bias on the USD JPY just on an intraday basis in the near term, using that block in order to define the resistance. Now, from a structural point of view, the chart has developed quite a lot since analysis, which I posted last week, and what we're looking at the moment is a support which has developed circa the 1700 handle, right? So it's developed at the 117 price handle, and so from a structural point of view, what we'd say is that so long as the price actually remains above that block, we would consider the bulls to be in charge. Any shorting that we're doing before that, we consider to be counter trend. But if she's going to collapse and if we're going to get a more significant correction, what we really need to see is for the price to make her way through that 1700 price handle. Once she's able to do that, you can sell pullbacks quite securely and consider there to be a structural change at that price level, and then start targeting deeper correction. And we could very easily be talking 115, and if she's able to go through 115, we could be talking a lot lower, even as deep as the 110 price handle. I don't know if that can happen before the end of the year. We've seen some pretty volatile Decembers over the course of the last few years. There's always been one instrument or another which, during the month of December, has chosen to move 7, 8, even sometimes 900 or 1,000 pips. Sometimes, is it going to be USD JPY this time around? I don't know. She was very, very volatile last December. If you remember, we had that bullish momentum developing the tail end of 2013, and a lot of yen crosses gave a lot of pips. So, if we get that breach of 17, then I think it will really open the doors, and there will be a lot to play for to the downside in that instance. As long as she remains above that 17, on a technical, structural level, the bulls remain in charge. But we continue to look for those counter trend shorts because we're tough guys like that. All right, so we'll continue looking for those shorting opportunities, and I'm quite happy to do it. I think that there is a wider game to be played here on the USD JPY. Just mind your exposure as usual. All right, we've got a similar kind of picture developing on a number of the yen crosses, and I wasn't going to look at them in order, but it may be worth actually just doing that. First off is the GBP JPY, and we need to adjust this support wall, it looks like a little bit, but there's a support wall here on the GBP JPY, and we've seen this morning after those PMI number releases some spike through. So what are we doing? Here we go. Ouch. Let me just get this marked. All right, so there's our support wall for the GBP JPY now. Right? And again, it's going to be a technical play, if anything, right? That's all it's going to be. So if it happens that the price can come and collapse through that support wall, then on a pullback, that will become a short. We're looking for support to turn resistance on a technical level. So long as the price remains above the wall, the bulls remain very much in charge of this particular instrument, right? So we need to see that breakdown, and then we can become a little bit interested in shorting the instrument. If this is going to be a yen move and we see it happening on USD JPY, inevitably we will start seeing it happen on GBP JPY. We'll see it happen on Euro JPY, and we'll see it happen on other crosses too, right? So that's if it turns out to be a yen related move. So we want to have these key levels marked pretty much across the board. And what it does mean is that if you miss it on one, you may well catch it on the other. But what you don't be doing is to be giving yourself exposure on all of these pairs at the same time. NZD-JPY, right? So I'd marked a support resistance wall here on the instrument. And again, that still looks to be in play, although it can probably be adjusted at this stage, and you may well be doing something like that now. So we just want to be taking the low with the high. All right, so in this instance, more a case of looking to pick a fight, right? And so there's our support resistance wall. Any move up to that block, I think that she can move lower, and there's room for her to move a lot lower. Similar kind of, she's very similar actually structurally to what's happening on USD JPY, right? But any kind of reaction off of that level, and if you're aggressive, you'd go at the wall. If you're conservative, you just need an M1 bar to change direction, right? Just kidding, yeah, you can wait for a H1. But once you've got one bar changing direction off of that, that's pretty enough good enough to tell you that that wall is significant. And if the wall's significant, you're good playing shorts off of it. Go for it. It's still kind of aggressive up there. If you're looking for a structural change on this instrument, then we have support, and that support is coming in at just sub the 92 price handle. So that's coming in around about the 91.80 price area, and we'd say on a technical level, so long as the price remains above 91.80, you can see it's quite kind of clean and clear, right? It's just support, and we do very much suspect that so long as that support is holding, the bulls will remain in charge on this instrument. We would want to see a breach of that support before you can really get excited now shorting this particular instrument. So it's a counter trend trade. We like the wall, but you want to see a little bit of a reaction off of that first, especially considering that the weekly and the monthly flows have turned positive this early on this particular instrument. I mentioned it's NFP week already this morning. So one of the things about NFP week, and this is actually very interesting to see if this observation holds true. It's a very general rule of thumb observation, but what you do tend to find is that with NFP data, when you have a pair which has been in a significant trend, and the yens over the course of the last few weeks have been, right? So it's all going to become about this snap December election, I guess. But when you find pairs that have been in a significant trend, the first reaction on NFP tends to be to break out in the direction of the trend. We'll see whether that rule of thumb applies this Friday or not. Not necessarily something which is tradable. It's not a technical, but ordinarily it does help to have some level of expectation like that. And I've usually found that to be the case, or I've observed that to be the case more often than not on NFP releases with instruments where structural supports have been established and which are in a trend. So the first breakout I expect after NFP would be north, and then if she's going to reverse, she'll reverse after that. So we'll kind of see how that plays. But in the first instance, just eyeing the wall on NZD-JPY. Let's just take a quick look at Euro-JPY, right? So Euro-JPY, very similar kind of play, right? So you can see the support wall, which is marked. And again, it's just a case that so long as the price remains up above this support wall, then actually the bulls are in charge. But my favorite play would be a breach of that wall, right? So you get the breach, you can chase it, the pullback, you can sell it, looking for that wall to turn resistance, and then look for a follow through to the downside. And if she does break down, we could be back inside the 145 price handle. And I don't think at this stage it would take too long to reach there, if indeed that is the intention that this instrument has. So it makes it clean technical, and the reason I prefer the break and the retest is it just gives you a sharper it'll give you a sharper risk definition. It's something that you can get involved in, risking maybe in Euro JPY. You're talking about 30 odd pips or something, and that would be more than enough in order to tell you if you're going to be right or wrong about this. That's if you're being aggressive. If you're being conservative, as I've mentioned before, you just wait for a bar to change color on the instrument, and then you take your entry after that. And ordinarily it tends to be a much better approach quite often than the aggressive entries, but every trader is a little bit different, and it's just a case of how your risk profile is, right? So it's a good wall on USD JPY. I like it. My preferred play would be the breach. So long as the price is holding above it, then technically the bulls remain in charge on this particular instrument also. Okay, let's take a look at GBP USD, right? So this is the GBP USD, and from quite a few weeks back, it was maybe the first or second week of November, we issued an analysis on GBP USD. And at that time, what we were talking about, at that time, the price was here, and we'd marked these two walls on our chart. And what we said was that we think that we're ready for the bullish momentum to resume on GBP USD. And if we're looking at the move last year, we would consider this move down to be corrective. And if the bull momentum is going to resume, if this is going to be the end of the corrective wave and we're going to get a new bullish wave developing, then this would be the place where it would happen from. That was the analysis that we published. And so we kind of published that analysis, and the price broke north 100 pips, and then in usual style, she ended up collapsing through that support. But we'd also marked this secondary wall, and that wall gave support. So we've continued with that theme over the course of the last few weeks. We've said, what, if we're doing anything with this instrument, we're looking to buy in defense of the 156 price handle. Last week, again, she gave quite a significant rally to the upside. We were able to capture some pips off of that. And this morning, we've triggered long trades again. And I'm just going to show you the area or the level that we're looking at, probably best visible on the hourly time frame on this instrument. But this morning, the area that we highlighted was this block here, right? So that block is from about 56.20 to about 56.40. And early this morning when we published our analysis, the price action was over here, just sub the 56 price handle. Now here's the thing. Our entry is here, right? And technically, so long as the price now remains above this block, it doesn't matter where you get involved. So long as she remains above that block, then we would consider the bulls to be in charge on the instrument, and our bullish analysis is back in play. If it happens that she can make her way through that 58 price handle, eventually we could be looking at a return to the 71, 72 price handle over the course of the coming weeks and months. And all of that very much rests on this 56 price handle and the defense of this 56. If it happens that she's breaking down through that again, at that point, suspicion would be that we're opening up the doors for the 53 and we would sit aside. But our bullish play on GBP USD has triggered. She's worked her way through that resistance block, and now in a pullback, we would look for that resistance to turn support. We'd be looking for that to happen again around the 56.40 price handle. That is the key on GBP USD. If you haven't seen these walls before, I'm just going to zoom out a little bit, and this is where they're taken from. So we're taking the February, one moment. We're taking those February lows and we're just connecting it to the candle highs here back in June of 2013. So it's February and June 2013. Those are the connection points for these levels, and you can see it's connected to that support there in July also. That's where those two walls have been taken from. Just one additional note on GBP USD, which is that sure, we saw a pretty straight fall on the GBP USD. She consolidated there for a week and a half before she actually started falling, and we've seen 2 or 3 weeks of consolidation here on the GBP USD. Now it's about 2 weeks of consolidation here now. It doesn't mean that you can't have more consolidation here, right? So that consolidation, it could continue for quite a while, right? It's not necessary that you get that straight break to the upside. What is important is to have the viewpoint, right? And once you have the viewpoint that 56 holding means potential for a significant swing, it will give you several opportunities to play. You can take a little bit and take it off on a pullback, take a little bit more and take it off on a pullback, take a little bit more. You can close one, hold one, close one, hold one if you're taking a couple of positions. But the longer that she sits here and the more sideways price action that we get, the greater the more of a confirmation that is that there will be a bullish resumption from here. Okay, so and if you just kind of think about it a little bit, we've had this analysis. We had this analysis before the price action here developed. We were actually looking at the analysis while the price was falling, even through the 60 price handle, and we had a pretty good idea that we'd get some level of reaction here, and would be looking for that wall to hold. And if that didn't hold, we're going to be looking for this one to hold, and that there would be a bullish swing that would develop off of it, right? So all of that before even the price reached those price levels. Now, having had that expectation, when you're seeing the price stalling at an area where you expected her to stall and where you expected a reversal to be generated from, then that stall in itself is a confirmation, right? It's not that we're looking at a stall and then we start wondering, hey, is it going to reverse from here? We expected the stall, and so then it makes sense to use that stall as a confirmation tool in itself for the analysis. And as time progresses, the longer she stalls, the more aggressive we can get with our positioning and with our entries themselves, right? So GBP USD still very much on the case with this. I like the idea that the price is stalling, and the longer she stalls, I'd like to see her stall all the way through December. That would be ideal, right? But the longer she stalls, the more likely she is to break north out of that consolidation block, right? That's the viewpoint that I have on the instrument, certainly in the near term. And it's only going to take a few days to prove me wrong, but heck, it's better to be opinionated than to have no opinion at all. All right, what's left to look at, right? So dollar Swiss have quite an aggressive short viewpoint on this, right? So marked a support wall that's done off of the hourly, something like this, and the points which are being connected. Probably a little bit hard to see here, but we've got that upper hourly low there and we've got that low there, and that's what connects my wall. The price has chosen on occasion to kind of ignore it, to ignore the wall, but she's also chosen on occasion to hold, right? So I'm just waiting now, and I like the idea that the month has already started breaking down and the week has started breaking down, but a breach of that wall, and I'm looking to be playing the shorts on USD CHF. First target to the downside will be the 95 handle. That's the lower support wall which I've marked there. And if she's able to breach that, then I think it opens the door a lot lower, and we could be looking back at potentially even as deep as what, the 92 price handle, right? So maybe 400 pips to the downside here on USD CHF. And if you've been following over the course of the last few weeks, pretty much every week in November we took a short trade on USD CHF and we made pips, and I think that there will be again a swing which ends up developing off of here. That's what I'm looking for. A lot of obstacles in the way of that happening, right? A lot of obstacles, but that will represent my trigger. I'm looking for a short play on USD CHF. If she breaks through it, I will chase it. That's the plan, right? So USD CHF, quite a nice support wall to be working off of there, and looking for those shorting opportunities on that instrument. Okay, what else do we want to take a look at? Euro GBP, and then we'll take a look at the Kiwi crosses. So first off is the Euro GBP. Euro GBP, again, a little bit of an awkward wall here, right? But it gets marked like this, and I don't know, I think you're kind of good to sell right now, right? You're kind of good to sell right now, okay? And there's a little bit aggressive selling here, but you're good to sell, and you can put your stop just above that high. That'll give you a 25 to 30 pip stop, right? But the plan which I have published, and the idea that I have, is that it's a very nice support wall. We've seen the price kind of work our way through, pull back, and supports become resistance, and resistance has become support. But my suspicion is that the next break through that wall, that's going to be an important one, and that will open the door to fresh lows, pushing back into the 77 price handle, and maybe even deeper than that, right? So if you're getting involved right now, it's a little bit aggressive, only because above that wall, actually, we would consider the bulls to be in charge. But, if she's breaking down below that, then the bears take control. And if the bears are in control, there could be a long way down on this instrument, right? So Euro GBP, I'm liking that wall. I have one caveat only with the Euro GBP, which is if we zoom out a little bit, there's some messy kind of price action here, and we can see that she's going into a range. And once an instrument does go into a range, she becomes prone to spikes, and that is the only kind of air of caution that I have on Euro GBP. Otherwise, I do very much like the idea of shorting it on the price breaking through that wall, and I don't even object to doing that at market at the current price, right? So worth marking that wall. Just use it for bull bear bias, and I think you'd be kind of good to go with that. Right, quickly, the Kiwi crosses. So NZD USD, right? It is NZD USD, and I think I've probably looked at this every time I've been here, right? So I was only here the once last month, but still, every time I've been here in November, I have looked at the NZD USD. I do very much believe that the bear bias remains intact on the NZD USD, and I'm using this technical in order to try and define that, right? So we have resistance now, which has been established at the 80 price handle, and I believe that even if she rallies up towards the 80 price handle, even if she nudges through that a little bit, I do believe that eventually she will collapse again. The Reserve Bank of New Zealand has not only stated that they want to see the instrument lower, but they have also intervened in order to drive the instrument lower, and it is widely believed that that is what happened in August, and that is what happened in September. And if you follow the COT data and you're looking at general money flows and stuff, there's every indication that the Reserve Bank of New Zealand actually intervened in order to create a collapse in the value of NZD/USD. Now, the issue here is that they started talking about it when the prices were up here, and the Kiwi Prime Minister said, he backs the Reserve Bank of New Zealand in wanting to weaken the Kiwi dollar, and he said that back when the prices were up here. And so the issue is that we've kind of gone from 87 to 77. That's what's happened, right? So 77 divided by 87 is what? That's like 8.8%. It's not a very significant. It's not a very significant fall in percentage terms, right? That you're talking about 10% so far, roughly thereabouts. So when the Reserve Bank is saying we want to see a weaker Kiwi, I don't know if 10% actually really is a weaker Kiwi, if the thinking makes sense there, right? A weaker Kiwi would be a Kiwi which is weaker by 20%, by 25%, by 30 or 40%, right? When the Bank of Japan started talking about a weaker yen, right? The yen was trading there at the 77 price handle, right? And she's, another 2,000 pips, and she will have halved in value compared to where she was at 77 price handle. Kind of get the idea there, right? That, when they're looking for a shift in the value of the currency, the kind of shift that they usually tend to be looking for tends to be a significant shift, not something that could occur anyway over a quarterly cycle or over a monthly cycle or over an annual cycle. And so far, the move that we've had in NZD/USD is one that is consistent with what you might expect in a monthly cycle anyway. So our expectation is that, hey, if she rallies and she's heading up through the 80 level in particular, then there are going to be a lot of shorting opportunities there, and you want to stay short on this instrument. And eventually, the Reserve Bank, they will step in and they will start defending the levels again, right? So whether that happens at 80 or if it happens at 83, it really doesn't matter, but it is something where we can have positive expectation. And if we are going to get a real devaluation in the Kiwi against the dollar, then we should be really looking downside at 70, 65 even, right? 60 maybe even. That would represent a significant devaluation in my mind on this particular instrument. So I remain bearish on the Kiwi dollar, and just looking for technicals to start getting involved. Anytime we see bearish flows in the instrument, it kind of becomes good to play. And if she is rallying, then I think the first defense will be up at around about the 80 price handle, shorting against that support and resistance wall that we've got marked here on the daily, right? So definitely a key play to look out for, particularly what with the events that we have on tap this week. There are enough events there to cause the kind of volatility where she might rally 200 or 300 pips and then collapse the same amount in the same day, right? So even if that happens during NFP, especially if she's hitting the underside and she has a sharp rally to that on the day, I think that will become play, and so you can kind of understand why NZD-JPY is also on the radar, and we've got our technicals marked here on the NZD-JPY also. All right, so I think that this will be more to do with the Kiwi than the yen, but it is worth playing those technicals given the opportunity, and hopefully we'll have more than the wind in our sails. We will have the Reserve Bank backing our trades, and there could be a lot of pips to be generated off of that and made there. It may be worth taking a look at GBP NZD, right? And looking to see if there's something here. Okay, let's leave GBP NZD alone. I can't. There was a level that I had marked as a line I'd drawn, but I need to concentrate to find the connection points on that. But similar kind of thing. Like if that NZD is going to collapse, you're going to see moves pretty much across the board. You're going to see the same move on GBP NZD, Euro NZD. Euro NZD in particular already, she demonstrated a lot of weakness this year, and so I think if she starts rallying and breaking through walls, there'll be a lot of room to the upside on this instrument also. But with looking for that NZD weakness, you can be looking pretty much across the board at all the crosses, and the impact of that on GBP NZD and Euro NZD would be a move north. Okay. All right. Yeah, folks, that is my lot this morning. That's all the charts I'm monitoring. I hope you've enjoyed this presentation. If you have and you like what you heard, don't forget to check out my website. It's WMD Forex, www.wmdforex.com, and I publish my analysis there every week. You're welcome to subscribe to that. Thanks as well to the team at FX Street for providing the platform. I will be back here in a couple of weeks' time. I think the next one is on Monday, December the 15th, right? So if you are around, you will get a email message, I believe, from FX Street, just letting you know that webinar is on. So I'll see you all the next time. Until then, trade well and have a good one. Cheers. Bye.